Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 16th, and got a few economic news releases scheduled for today. And let's go ahead and start off with the economic news releases. The housing starts is what we'll kick off with, and the previous month was at 613,000, and they kind of figured it'll drop a little bit, and it did. It didn't drop as what the estimates came in, but pretty close. These are again still all-time lows when it comes to housing starts. So this isn't good economic news, even though we didn't hit the estimate. These are all-time lows. So these aren't numbers we want to be in. We obviously need housing starts at a much higher rate than 600,000. Single-family permits, basically you're going to notice it will be the same thing. We had 402, and basically came in at 404. So a slight uptick, but again, these are both all-time lows. We need a much higher uptick in these areas to kind of get the housing industry moving forward to try to help the economy and provide a lot more jobs out there and kind of get a little bit more growth here in our economy. So this isn't good news, but we'll go ahead and take a look at industrial production, and you'll be seeing actually some better news here. We got 0.4% the previous month, and we were expecting an uptick to zero point 0.9, and it came in at zero point 0.9. So estimates came in correct, and capacity utilization 76.9 previous month, and slight uptick, and it did go up by 77.5. So those two provided good news, and but the worst stop was the housing. So we're still looking pretty grim on the housing side of things. So let's go ahead and take a look at the headline news and see what's going on. Stock market's currently down a little bit right now. Fitch maintained the U.S.'s AAA rating on the credit rating. So we had, the three big ones. We had Moody's, Fitch, and S&P. So we haven't seen Moody's current most recent coming report yet, but right now Fitch is maintaining the U.S. AAA rating right now. So unlike the S&P. And the big news today is actually Germany's economic slowdown trumping other news this morning. So that's kind of, even though the stock market was kind of getting excited about the capacity utilization, the industrialization, Germany's economic slowdown, they've been kind of moving along here, but with this slowdown practically almost to zero, their GDP came out and it looks pretty grim for them as well. So that's what's trumping everything. Moved over from European stocks were down to kind of trenching over to the U.S. So that obviously provides a lot more concern here in the U.S. as well, since we're all kind of interrelated globally here. So let's go ahead and look at the bond market and see what that's doing in interest rates. Basically, we're at a standstill. We're up a little bit. We're starting up a little bit higher. As we saw, we had a little bit of a downward movement on the bond. So, rates didn't. I didn't see any price adjustments yesterday. We made today. We'll probably go into today's pricing because it didn't really make a huge drop here. But we raised it up a little bit. We had a slight dip, but raised it. So we're basically at zero. So we're almost where we left off yesterday. So rates will remain the same. Interest rates will be about the same where we were yesterday. And but I would caution you that with the sideways movement, it's looking for some numbers that could break either way and potentially could have a correction here. As I mentioned yesterday, my buddy Dan Rawich, who is a former trader, basically thinks we could correct all the way down to about 102.5, which would be a pretty big drop here. Obviously, we'll raise rates a bit here again. So. Usually what happens if we have a correction, we'll usually correct at least a third to about a half, and that would be about what I think what he's thinking about 102.5 is would be about halfway there. So, all right, folks. Hey, I also want to say thanks to all those who've dropped by the Mike's Daily Market Report.com and checked out. I believe I had a sudden surge last week with a lot of people coming by, and I think a lot of it had to do with the a post I've made, Strike While It's Hot, and I want to say thank you for those of you who've checked it out. If you haven't had a chance to check it out and stop on by, it was posted about a week ago, and check it out at Strike While It's Hot. And then also for you home buyers and people looking to refinance, take a look at my website, CaliforniaMortgageTips.com. I think you'll get a lot of good information for what you're looking for, whether it's for improvement in credit scores or tips on the home buying process to uh, a lot of different things. We even have videos on people who are going through divorce to try to help them out as well, since these are not good economic times, and that's number one reason for divorce. to help prepare yourselves financially. So feel free to stop on by CaliforniaMortgageTips.com. Otherwise, I'll catch you guys tomorrow. Have a great day.